Welcome to Global Risk Community Chat. Today our guest is Sajid Iqbal. I'm very happy to have you here today, Sajid. Welcome.
Thank you, and thank you for inviting me. And it's great to be part of your show.
Thank you so much for joining. So before we get into our topic for today, can you briefly introduce yourself to our audience?
Yeah, you already mentioned my name. My name is Sajid Iqbal, and working as a deputy CRO at Habib Bank, AG Zurich. Habib Bank AG Zurich is a Cat 4 licensed Swiss multinational commercial bank, which is based in Zurich, Switzerland. It has its operation in multiple jurisdictions across the world: Hong Kong, Kenya, Pakistan, South Africa, UAE, UK. I'm currently based in Dubai, UAE. In my current role, I wear multiple hats, of which I'm managing market and liquidity risk. I also look after model risk, model validation. I am also SCA certified risk manager for our wealth management segment. SCA is the Security and Commodity Authority of UAE. I am a certified digital banking expert as well. I've been playing critical roles in implementation of a regulatory risk framework in our bank, where in recent past I have been involved in successful implementation of IRBB risk systems and models and LIBOR transition across all of our branches and subsidiaries. Apart from my professional responsibilities, I do public speaking in international conferences and write articles, blogs based on my research on different topics of my interest, such as risk, banking, fintech, wealth management, blockchain, crypto. Yeah, that's about me.
Mm. Sounds quite diverse and interesting, actually. So I'm kind of curious what topic you would like to share with us today, then.
Yeah, today I would like to talk about crypto assets and risks. And why I have chosen this topic for our today's discussion is because of two reasons. Number one is that there is a lot of noise on crypto market performance recently. So it is important, I feel it is important to address a lot of misconception and unrealistic expectation of retail investors. So I will briefly debunk some of the myths. Number two reason is crypto is a reality. And in my opinion, we as a risk professional have responsibilities to first understand these realities and get ourselves familiar with them, and then should be working to assess the unexpected risk well before it creates any systemic risk to the entire financial system. Secondly, we should get ourselves involved into more discussions and debates to spread the awareness and to debunk as many myths as we can. This will also help in fighting against frauds and scams in crypto market. Right now, the percentage of scams and frauds are very high, and many people are losing their hard-earned money very easily. So, so I would not be able to cover everything in today's session, and that is not the purpose of today's discussion. As I mentioned, I just want to spread some quick awareness about it. But anyone is welcome to follow me on LinkedIn if they are interested to know more about crypto, blockchain, digital assets. Because in next couple of months, I would be speaking about crypto in international conference. And if interested, people can sign up for these conferences. So I'll start by mentioning some statistics on crypto, just to put things into perspective. Uh, According to my research, there are over 20,000 cryptocurrencies, and out of those 20,000, only half are active. So other half are either dead because of zero value or they are not active. So total market cap of all these cryptocurrencies is more than $900 billion. And of course, it keeps changing by every minute because the high volatility of crypto prices. And if you don't know, market cap is a result of price into supply. So out of these thousands of crypto, two, which are Bitcoin and Ether, capture the half of the market cap, which is around $500 billion. So these are just few statistics just to mention magnitude we are talking about. Um, However, I would suggest everyone to do their own research before putting money on the line and before taking any blind risk on your money. Uh, Now I'll quickly talk about some myths about cryptocurrencies, and these are just myths without any reality attached to them. So first myth, which most of the retail investors believe, that all cryptocurrencies are same. And there is a popular common belief that all the altcoins are like Bitcoins. And this is absolutely incorrect, because the term cryptocurrency is used to describe a wide variety of coins, systems, and networks. So many of which have different properties and different ownership structures and different level of volatility. So for the ease of our listener understanding, I would suggest an analogy. Uh, think Bitcoin as a McDonald or KFC of crypto world. And other old coins are just like startup fast food businesses. So you will understand that why Bitcoin and is very long-standing thing, because it's been there for many years now. But other altcoins are not the same. They have different structure, they have different purposes as well. So I would recommend that always try to understand the background of any coin you want to invest, and try to understand the use case of project, either solving some problem or have future business case. Just like I mean, we do public stock companies research when we are trying to invest in them. The second most common myth is get rich quick myth. So I have seen people falls into trap of the high yield returns, and because of this, there are a lot of scams in the market. Unfortunately, everyone falls for it because in numerous percentage returns are promised. Scammers are promising daily returns more than 100%. There are DeFi contracts they are offering. Just think that if making money was that easy, then everyone would be doing it. I mean, there is a reason people put hard work in building successful businesses, because wealth creation is not simple and easy process. Uh, so third myth I would like to discuss is about stable coins. So most people believe that all stable coins are backed by US dollars. But this is not completely true. Stable coins are developed to, I mean, for the convenience and speed of digital payment system. So they can offer some stability of traditional financial transactions. Um, so they actually offer the alternative to digital currencies, alternative to crypto actually, and they are specifically designed to have limited price fluctuations. So some stable coins are backed by fiat currencies like dollar or euro or Japanese yen, for example, but not all, because other are backed by some stable coins are backed by precious metals, just like gold and silver and other things. And recently we have seen that some stable coins are based on algorithms of supply and demand. So when supply increase or demand increase, the value of those stable coins increase and decrease as well. So it is very important to understand that because of shock, any shock to the underlying asset value, like if the underlying asset is precious metal or fiat currency or anything, any shock to that underlying value, that it could easily break the peg of stable coin to make it very unstable. So people can search. Recently, we have heard about the famous Luna Terra fiasco happened recently. So that will tell you all the story about the beliefs and disbeliefs about these stable coins. So although, I mean, there are many more myths to debunk, but considering our short time for discussion, so I would just like to mention one more most common myth, which is about the safety of blockchain. So not all chains are safe, actually. It is very easy for any cyber attacker to get into your wallet, and you can easily lose everything within seconds. So it is very important and to understand that not all blockchains are safe, as we read in the media, and there are a lot of hypes that blockchain is good. Blockchain is good, but it's a safety. It's very subjective, and it's more easy to do fraud on blockchain compared to doing fraud on credit cards. So yeah, these are the things I would like to mention, because just to spread the knowledge and the understanding.
Thank you so much for sharing. I think you also covered most of the things that also comes to my mind. I want to just end with one last question, and that would be, I think you also sort of mentioned within every single myth, but if you could share one specific takeaway point with our viewers that they can start, like thinking about or implementing in one sentence, what would it be? What would be the most important thing about?
So one takeaway point I would like to mention: the crypto are highly non-regulated market. So therefore, always do your own research before putting your money. And this will save you to become the victim of any scam and fraud.
Thank you so much for sharing that as well. And with that being said, unfortunately, we have run out of our time. I wish we could, of course, hear more about crypto
Sure.
and your take on it and all the other myths or risks you wanted to mention. But yeah, perhaps next time. So thank you so much for joining once again. And yeah, thank you.
Thank you so much. Thank you so much for inviting me.
Yes, have a great day.
Thank you.